It's about that time of day again. My name is Joseph. Wednesday evening, March the 28th. Welcome back to your nightly newsletter. My plan this evening is to identify the most reliable trading opportunities setting up for Thursday's trading session. And I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, we have crude oil, range bound and rotating back to the high of today's range. And my focus is on buying opportunities using the momentum, using the pendulum swing as my target for tomorrow. The S&P is also sideways, this time with a triangle. And this tells me this market is balanced, and I should focus on failures both above and below the range tomorrow morning. Nasdaq also range bound with an ugly session today. So my plan is to fade those breakouts using failures and traps, buying low, selling high, and avoiding that middle tomorrow on the NQ. Gold is bearish and targeting the prior month close after a very strong move down in today's session. And my plan is to look for selling opportunities using buyer failures up above the moving average tomorrow morning. The euro also bearish with a strong move lower tonight, and I have my eyes on a key reversal line overhead for the most reliable selling opportunities on the way down to last Friday's low. Boy, do I have a great newsletter in store for you guys and gals tonight. We got some nasty ranges. We've got some great momentum plays setting up for tomorrow. And we get some strong trends. Bit of surprise on the gold, so stay tuned for that as well. And we get the last trading day of the month of March is just around the corner. We got some big learning and earning opportunities on the newsletter tonight, and I have a great video in store for you guys and gals. Before I jump in, though, and put the charts together for Thursday's session, I got to remind you, if you're watching on YouTube right now, please don't forget you can find a detailed description of the entire strategy on my blog at sidewaysmarkets.com. I'll put all the links in the description of that YouTube video, so follow those links and head over here to Sideways Markets for the full length text description. Also, if you have any questions about anything covered in this video, please remember to post those questions in the comment section below the video. And if you like what you see, please help support this channel by subscribing and hit the bell icon so you get notified every time I post a new video. And if you really want to stay in tune with everything we do here at School of Trade, head over to the blog at sidewaysmarkets.com. This is where all the action happens. I'll put all the links in the description of that YouTube video. Head over to Sideways Markets, and while you're here, don't forget, join the mailing list. I'll send you an email anytime we put anything new out here at School of Trade. That way you never miss a beat. While you're here, don't forget, join me on social. Lower left-hand corner, StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice. This gives me a chance to publish stuff you won't see anywhere else on the interwebs, charts, links, and updates they won't see anywhere else on my YouTube channel, so make sure you find me on social media in the lower left-hand corner. And speaking of all the charts, how easy is this? All the charts from tonight's video, get them ready for your trading session tomorrow. Right where that link says, click here to download today's charts, and you'll have all those charts ready for tomorrow's session. And then speaking of tomorrow's session, last day of the week, last day of the month, grab that free pass in the upper right-hand corner. If you're not a member here at School of Trade, what are you waiting for? I got a free pass with your name on it, upper right-hand corner. Grab it by the end of the day today, and I'll see you guys tomorrow in the trade room as a guest. And if you have any questions, don't forget, you can always post those questions below the video on YouTube or here on our blog, or you can always hit me up on live support on the right-hand side of the website. I look forward to answering all of your questions. All right, enough of the chit-chat, Joe. Let's jump right in. Let's get this day started here for tomorrow. Tomorrow's the last day of the month, last trading day of the month. As I mentioned earlier on in this week, Friday the 30th is the Good Friday holiday. Markets are closed. In fact, we also have a short day tomorrow as well. So kind of a half day, if you will, right? Kind of a half day tomorrow. But we assume that with the end of the month coming right around the corner, we expect there to be some fireworks, right, as we go into that last trading day of the month. So, of course, tomorrow is the 29th, right, without any markets open on Friday. Tomorrow is the final day for traders to be able to manipulate their portfolio, to pad those numbers before the end of the month. We talked about that earlier on this week on the prior weeks, on the prior day newsletters, right? So everyone's on the same page on that. So tomorrow, last day of the month, last day of work for a lot of traders. They're going to have to get their jobs done tomorrow. We saw how sloppy and choppy the markets got because of that today. We're expecting to see a little bit more of that in tomorrow's session. So again, Friday is closed, right? So nothing on Friday. So of course, we'll come back, right? Not tomorrow night, right, for the newsletter, right, but the following Monday, right? So no newsletter tomorrow night because, of course, the markets are closed, right on Friday. So knowing that, again, tomorrow is an early close, right? Tomorrow, early close. Bond markets, equities, right, will be closing up early tomorrow. So the rest of the market will probably follow suit. So the most important thing for tomorrow is going to be get to that market early, right? Get in early, get out early. And that's good. We have some news tomorrow morning at 8:30 to get this whole party started. We'll get the jobless claims and the personal income number tomorrow morning at 8:30 Eastern time. So that will definitely help us get this day started tomorrow with a bang. And then I would imagine, after 11 o'clock, 11:15 Eastern time tomorrow, you've got to have a really good reason to be trading because it will probably be relatively sloppy and choppy tomorrow afternoon ahead of that early close at 2 p.m. Eastern time. So please make sure you get to it early tomorrow. We've got big news at 8:30 Eastern time. I'll be opening up my trade room at 8 o'clock Eastern time like we always do Monday through Friday, and I look forward to seeing you there, right there with me. Let's jump into some charts. So last day of trading is tomorrow. It's a half day, right? Get at it early. So what's the plan now for tomorrow? I'm going to go crude oil, S&P, Nasdaq, gold, and we'll wrap up on the euro. Now, the first few charts tonight are some nasty, nasty ranges. This is the best looking range we have on all the charts for this evening's newsletter, right? So take it while you got it because the rest of these E-minis are really, really sloppy. We're going to grab those in a moment as well. Starting off on crude. Crude is range bound and rotating back to the high of this range, and the recent failure from the sellers is setting up for a big momentum run higher using the pendulum swing strategy for tomorrow's session. Knowing this, my concern is really just buying into those range highs up around 64.83. So I'm looking for pullback opportunities down near the lows. If price continues higher without a pullback, then I'm looking for seller failures going back into the range for buying opportunities to complete the pendulum swing target up around that 65.51 area. Now you're going to see a lot of this tonight because the crude, the S&P, and the Nasdaq are all range bound. But you'll notice, right, the day starts off inside of a nice tiny range, double tops, double bottoms. It was a relatively quiet session until we got the inventory report at 10:30, right? Inventory report sends price screaming lower, two legs down, and of course now we see the market jump up, failure into strength, strength into pullback, and now we are running higher. You can see that beautiful example of that trading range, one try, two try, failure, pullback, right? We talked about this over and over again on last night's newsletter. If you watched last night's newsletter, you were ready, right, for this pattern to go back into that range. So day starts off inside of a range. We shoot down below that range low because, of course, we had news at 10:30. And this is where momentum comes into play. And a lot of people use momentum in different ways. Here's one way to use momentum on a range-bound market, right? Market starts off balanced. There's a magnet right in the middle, right? The pendulum swings down below that range. Now momentum, it kind of shoots back into that range almost like a rubber band, and we expect now that momentum to carry that market all the way in the opposite direction. So we have a trading range environment which tells me I want to buy low, I want to sell high, I want to avoid the middle, I want to focus on failures. We saw a great example of that this afternoon. Strong move down, that's one try at the moving average. There's your second try, two try failure. Failures almost always lead to strength, right? Strength into pullbacks, and pullbacks now going higher. The targets now for these buyers is to first get back to the the opposite side of that range at 64.83. But the strength of this move, the momentum of this market is probably a little bit too strong to just stop at 64.83. Will likely continue here right into the upper edges of that range, and I have an eye on that pendulum swing at 65.51. So the trading range is the most important factor right now. The pendulum swing, momentum swings down. We expect that pendulum to swing back in the opposite direction, and I want to find a way to participate in that move. So how do we do this? Well, the big concern I have is I don't want to buy into the high of that range, right? It's not difficult to see, right? It's going to act as resistance. Most likely it will act as resistance, if not just a profit target for the buyers, which should result in a pullback. So really at this point, we're in the middle of this range. I don't want to trade the middle. As I've talked about many times this week already on range-bound markets, I want to stay away from the middle, buy the low, sell the high, right, and focus on failures. So ideally, I want to get down just below that range low and be a buyer down below that low. And one way this may happen here is to get a nice sharp pullback below the moving average. Think of this exact same pattern now: failure, strength, strength, pullback, right, and back up. That would obviously be the very best scenario for tomorrow, is a pullback down below the low of that trading range. From there, right, obviously we can hold our targets right up to that high. The challenge is going to be if we get this market going higher here. Again, I don't want to buy into that high, and I can expect to have a failure at the high as well. You've got to remember, in a range-bound market, you've got to be thinking, when we go back up here, we're most likely to see sellers try to sell this thing back into that range. The odds are not in their favor. The momentum of this market should be able to take this price at least up through that swing high at 65.13. I'll be quite surprised if we don't see that retest of 13. I'm thinking this could be a very, very strong bull run in the short term right here for tomorrow. So with that, what I want to do is I want to play the sellers. I want to play the game against them, basically. As we go higher, I'm expecting to see buyers try the first time. What I'm looking for here is I'm looking for what I call the fake out breakout pullback. And that is a strong move up with a two-legged pullback below the moving average, followed by a failure and a move back higher. I call this the fake out breakout pullback. I've talked about this numerous times on this nightly newsletter. And the reality is when we go higher, I'm expecting sellers want to try to sell this thing back into the range, right? The problem though is momentum is too strong. So rather than trying to buy that pullback, right, which is susceptible to a failure, right? We go up, we pull back, and that may fail. And we may find ourselves back into that range, and we'll buy the low, right, and we'll trade this range like we always do. But let's just say, for example, right, we pull back, two-legged pullback, right, but now those bears can't get, right, now they can't get it going, and that's when we can get in, right, and look for that buy going higher right here tomorrow. So expect those sellers to try and fade off of that high. Let them try once, let them try twice. I'd love to use some support levels, either top of the range, right, or that rising support trend line to be able to buy that failure for the sellers to finish off that pendulum swing. Now remember, the pendulum swing not only makes for an excellent target, right, but it also makes for an area where we may start seeing the market slow down. So watch for that failure up here, strength, and then back down into that range, right? So don't be surprised if towards the middle of the session tomorrow morning, we've finished off that pendulum swing and we're collapsing back down into that range. The problem will be is that the momentum of the market will be too strong going higher to try and call a top up here. I would not recommend trying to sell that failure because just the momentum of it will be too strong, right? I want to wait for now to get back above that, get back below that moving average. Just like this buy right there is a lot more reliable than the buy right here, right? It may not be as profitable, but it's a lot more reliable. I want to look for that same pattern, right, coming back down below that moving average. Does that make sense? Did I miss anything on that? If not, let me know in the comment section below if you want me to clarify, right, on this strategy. So day starts off as a range, momentum swings down. We're expecting momentum to swing back in the opposite direction. I want to get in below the low of that range, or above the high of that range, I've got to let those sellers try to set this sucker back into that range. And then if they fail, then I can look for that buy, right? Continuing to go higher up to that pendulum swing at 65.51. Remember, two-try rule back in, two-try rule back in, keep buying that low, keep selling that high, and again, watch for that nice pendulum swing right early in the session tomorrow. And it's got to be early, right? Because we have that half day on the calendar for tomorrow. All right, from one range-bound market to another. Over to the S&P. S&P is range-bound and trading sideways, a triangle pattern. This range tells me the market is balanced, which means both the buyers and the sellers have the opportunity to participate in both sides of this range. My plan for tomorrow then is going to be to fade the breakouts using those failure patterns, buying low, selling high, and avoiding the middle. Now, talk about pendulum swing. Here's a great example. Double tops, double bottoms. This is a trading range, right? Shortly after we open up at 9:30, we see a breakout below the range. Momentum swings back in the opposite direction, and surprise, we see just about the same number, right? Same size breakout on the opposite side. So again, I talk about using momentum on a range environment. Find that range, let that momentum swing down, and then use that momentum swing on the opposite side. Right now, again, with that, strong move down, one try, two try, back up into that range. Strong move up, one try, two try, back down into that range. Right now, trying to get that pendulum swing back in the opposite direction, one try, two try, right, buying back into the range. Or perhaps a move back up to retest that high, one try, two try, right, and back down in. So most important thing right now on the S&P is to sell high. It's to buy low. And of course, stay away from the middle, right? Stay away from the middle. Don't fiddle with that middle. Nasty, right? Inside the middle of that range. So how do we do that? Two-try rule, right? Look at this example back here. Look at this example back here, right? Lots of good examples in this chart. So we go up, moving average comes over. Buyers now try to buy that pullback, right, and expand the range. One try, two try. We know where their stops are, and we're back down into that range. Same thing as we go lower. One try, two try. Back up into that range. Again, stay away from the middle. Buy those lows with seller failures. Sell those highs with buyer failures. And as I always remind you, the goal is to get as far outside that range as possible. So even if we see a real strong break higher, don't just assume this market's breaking out. Make sure they can hold that pullback. If they can hold that pullback and run higher, okay, now we have a successful breakout. But the odds aren't very good of that, right? We expect that breakout pullback to fail into strength into pullback, and go right back down into that range. So don't be intimidated by a real strong breakdown. We saw a number of examples on oil and on the S&P today of where what appeared to be a guaranteed strong breakout failed and went right back up into that range. So avoid that middle, buy that low, sell that high, fade those breakouts, right? And remember, don't be intimidated by those strong attempted breakouts. Make them prove it to you, right, before you go trying to trade in the direction of that breakout, right? Over to the Nasdaq now. S&P's pretty easy, right? Buy those lows, sell those highs. And I got to bring one more thing here too. I almost forgot, right? We've got that prior week low, right? That Friday's low, prior week low. That'll be acting as a level of support here. The markets, as we go into the end of the month, if we do happen to see a bloodbath tomorrow, everyone's talking bearish right now. Everyone's talking about, right, the technology companies kind of bringing everything down right now. If we do end up going lower here tomorrow, there's the prior month low right there at 25.34. So if we do see a strong breakout that can then hold that pullback, right, and run. If this thing really starts taking off tomorrow, right, find that channel, and we're going to participate in this move down to that 25.34. We have to assume that's going to be a big target for those sellers if, it's a huge question mark right now, if they can actually successfully show us a strong two-legged move outside of this range. Does that make sense? Any questions? Leave them in the comment section below the YouTube video, and I'll get back to you right later on this afternoon. Let's keep going. How about some Nasdaq? Nasdaq, ugly, ugly, ugly. Boy, oh boy, this Nasdaq. Range-bound, sloppy session today, just below that prior week low. The trading range is the biggest clue, and with the strong move lower in yesterday's session, we know the bears definitely have the edge. With this information, the goal for tomorrow is to look for selling opportunities using buyer failures and traps up above the high of the range where we have levels of resistance. Now you can see here, right, this market getting clobbered right now. Nice big strong move down. In fact, it really was, you could look at this as a few different types of ranges here. The original range, which we talked about in last night's newsletter, found some great selling opportunities off of those highs. If you watched last night's newsletter, you were ready for that trading range, and there were some great opportunities there early in the session to sell off of those highs. But you'll notice, though, there definitely is that little bit of a bias to it. You can definitely see that little bit of that bearishness overall to the market, and then it's almost like they have a separate range now, right, a little bit lower. This happens every once in a while. You can definitely tell this market is quite heavy, right? You can definitely tell the bears are definitely winning this battle, if not just by a little bit, right? So we definitely want to look for selling opportunities above those highs. That will make our job a whole lot easier than trying to buy off of that low. S&P doesn't look as dramatic as the Nasdaq. The Nasdaq definitely looks like you want to be careful, right, trying to be a buyer on this market right now. Now, with that said, pretty simple, right? We found the original trading range, double tops, double bottoms. My exact words last night on the newsletter was, if you see a double bottom, right, on that move lower, look to sell up at that high, and that's exactly what you got. So again, if you watched the newsletter last night, right, you were locked and loaded for a very easy profit off the top of that range. With that, knowing we have this range right now, we have this big momentum swing down. You'll notice it bounces right off of that, what I call a range expansion, right? Take the size of that range, expand it down, the support levels below us. You can also take the size of that range, expand it up, right? That's levels of resistance overhead. So the bottom line is, you can see we have that strong move down, right? We bounce clearly off of that range expansion support. Take the range, copy and paste, project those range levels above and below, and then that becomes support. We see it bounce off of that support, one try, two try, and back up in. You'll notice that pendulum swing on the opposite side, right, puts us right at that 66.29 and a quarter, 66.29 and a half, right? Give or take a few pennies here or there. So obviously that would be ideal for selling. Get up and then fade it back down. But in all reality, we may not even get there. You can see how aggressive these sellers were earlier in the session. They didn't even let the market finish that momentum swing. They just sold at that high of that range. And that may be the case on the crude, and it might be the case on the S&P as well, right? We talked about that earlier on oil, how you've got to respect the top of that range on oil because you just don't know if you're going to get through it or not. So good example here of what might happen on oil, right? We may see that oil market bounce off the high rather than running through that high and giving us a continuation. So range-bound market, buy low, sell high, avoid the middle. I'd be very, very careful in the middle of that range tomorrow, right? That 65.19, 65.20, 65.21 area, right? Just going to keep that area off limits. And really at this point, we're looking for one try, two try, back down in. You know, look at situations like this, right? One try, two try, back down in. One try, two try, back down in. Again, you're more than welcome to try to be a buyer on this, but I would go a half size position or even a quarter size position on the long side on this market because you can definitely feel the bearishness here. So one try, two try, right, and back up in, right? So bears try once, pull back to the moving average. Bears try twice. You can see an example right here, right? And then of course looking for that strength, pull back and back up from there. That's a beautiful example, right, of that pattern, right? So watch that pattern tomorrow, going back up into that range. And then again, looking for pretty much the same thing here, right, as we go up. Strong move up. I want to get outside of that range, right? That's the key. Get outside of that trading range. That way you open this up to breakout traders getting trapped in the wrong side of the market. Remember, think about it, right? When we have a trading range, that trading range tells me the market's balanced. There's a reason why that market is going sideways. The buyers and sellers think this is a fine price, right? So we have to see some more proof than just a breakout. But I'll tell you right now, when I was a rookie, and this I made this mistake nonstop, and that's how I learned this, by making lots of mistakes, is that when people see a strong breakout higher, what happens is they go, oh my goodness, we're not range bound anymore. This is a trend. This is way too strong. I can't sell this. And what do? They try to buy the breakout. So this is where the second try comes in. Right? The second attempt to go higher off that pullback, those are all the buyers who haven't learned this lesson yet. Right? These are all the aggressive. Oftentimes they're retail, they're inexperienced traders, right? And there's so many of them flooding into the futures markets these days because of cryptos. Right? I mean, how many times will we get a phone call every day right now in my office saying, Joe, I started off in cryptos, but now I want to learn a real market, right? And I'm going to go with futures because I can use leverage. We've got great tax advantages, right? Liquidity is great. Buying and selling are the same. There's so many reasons why we have such advantages as futures traders. But there's a lot of rookies out there right now that have pardon the term, but they have no clue what they're doing, right? Because all they did with cryptos was just buy and hold or hodl, right? Whatever the meme of the week is. So there's a lot of rookies out there, right, that don't know how liquid markets really work. So they see these big, strong breakouts. They go, oh, shoot, better buy this, right? And they probably have learned from at least one chapter in a book not to buy high, right? So they don't buy that one, right? They say, okay, buy the pullback. Right? Buy the 382 pullback, buy the 50% pullback, whatever the heck it is. It doesn't matter what the pullback is, right? It's a range. It's not a trending environment. If it's a trend, yes, buy the pullback, right? But it's a range. So now you've got all of these buyers now who are in that position long. At the same time, you have sellers who are going, oh, just give me a reason. Just give me a reason to pull the plug and I'll sell this sucker back into the range. We see one strong red candle here, right? One big beefy red candle there. The bears now jump in because it's a range and they're selling the heck out of the range high. And all the buyers who got into that breakout pullback now, they're going, shoot, they got me. And they've got to get out of their positions now for a loss. They're trapped, and that makes the market collapse back down into that range, right? It's a modern day pump and dump, right, that happens every single day on range-bound markets, liquid range-bound markets, right, around the world. So we have that range, right? So we expect to see, I hope we get a nice strong breakup, right? I hope it tears through the highs here, all the way up to that pendulum swing up around that 66 and the 30, right, 30 area. Make those buyers drool over the pullback. It's going to be a trend, but wait for that failure, because once that sucker starts to fail, right, sellers will attack, right, buyers will bail on it, right, and the market tumbles back into that range. Big, strong breakout. Wait a second. It's a trend. Sell the bull. No, they got me right back into the range. Over and over and over again, right? This pendulum swings back and forth, momentum shifting back and forth. Remember, balanced market. Flat moving averages, double tops, double bottoms. Look back at the beginning of the day. It all depends on how the beginning of the day opens up, right? We saw double bottoms. I told you guys last night, right? You see the double bottom at the low. You knew literally at about 4 a.m. this was going to be a range-bound market. It was clear as day, right? So once you knew that, it was buy the low, sell the high, buy the low, right? Stay away from the middle. Don't even think about trading those breakouts. So I'll get off my soapbox here, fade those breakouts, buy low, sell high. And like I mentioned on the S&P, if this thing does turn into a bloodbath tomorrow, in other words, if we do see a 1 try, 2 try that continues, then we'll go find that new bear channel. Again, you're going to know it. It's going to feel like no turning back, right? You'll feel it. Remember, it's not the first move down, right? It's the second move down. That second move down, that's where the guts are, right? You can see it right here, right? First move down, second move down. Now, it's got nothing, right? No guts, no momentum going lower. If we see that second move lower, if it really takes off the downside, find that new channel, sell off that channel high, right? And we're off of the races down to that prior month low. Be careful trying to predict that, though. Again, this is a range-bound market. Okay, do not go losing all your money tomorrow because I said we might go to the prior month low. We're going to have to see some extreme conditions tomorrow to break free of that range, right? And obviously, we'll be in the trade room tomorrow morning, 8 o'clock Eastern time, and we'll do it with all you guys in the trade room tomorrow morning. So buy low, sell high, avoid that middle. Let's keep going. For the Nasdaq now, over to the gold. So we're out of all of the range-bound slop and chop. Now we're here on the gold, the yellow metal, and the euro, both of which have really strong trends, and we got some big prior month levels with our eyes on here. Now, first of all, I want to apologize for last night's newsletter. I didn't even see this rollover coming. It rolled over early. Usually we get rollover on the 30th at the end of the month, but I just didn't. I apologize. I should have given you guys a heads up last night on this rollover for today. The bottom line is, right, I come to my desk this morning, and it was obvious that gold had rolled over to the 618 contract. I should have known better. The end of the month is a holiday. I should have known they were going to roll over early. I just didn't put two and two together. So my fault on that. I apologize if you were caught off guard on that. I'm usually pretty good at giving you guys a heads up on contract rollover. The good news is, though, it was pretty easy to tell today that the 418 contract on gold was no bueno, right? Because it was very, very low volume, and the 618 contract, of course, gold rolls over every other month, right? So months 2, 4, 6, 8, 10, 12, etc. And so once we saw that volume was not very good this morning on the 418, we knew right away it was a 618 contract. Now also too, you can see gold just basically a straight line down, right? Gold is bearish, strong, almost straight line lower after a surprise contract rollover right to that 618 contract today. Anyways, this move lower was incredibly strong, barely pulling back to the moving average as it went almost 4 legs lower today. The lack of pullbacks is the biggest clue in my opinion. That tells me that sellers are patiently waiting for an opportunity to sell up at resistance, and my plan is to look for selling opportunities on the next pullback as well. Now, this happens all the time, and this is something you need to kind of learn about how the markets work. When we have a strong trend down, right, a strong trend that hasn't pulled back to the moving average in a while, that next pullback, right, that next pullback is usually going to be a very nice trade off that moving average. Okay, so if we have a strong move down, right, and we haven't pulled back to the moving average in a while, right, watch for that first pullback to the moving average because it will usually bounce right out that moving average. Now, this is where it gets a little bit more complicated because sometimes we get this. And we see this big move, right? And it doesn't pull back. It doesn't pull back. And it doesn't pull back, right? Doesn't pull back, right? Doesn't pull back. What happens is that you get all these kind of little head fakes around the moving average, but it never actually pulls back, right, to the moving average. We would have needed to see that pullback back here. Oftentimes, like I said before, most of the time you see a strong move in one direction, it's going to pull back to that moving average relatively quickly and will be a good trade short off of it. But there are these situations where, you know, the bears are waiting. They're waiting for a pullback, didn't get it. They're waiting for a pullback, didn't get it. They're waiting for a pullback, didn't get it. This is where we have what I call the okie doke. And what happens a lot of times is the next time it pulls back to that moving average, everybody tries to pile on. And you can almost kind of feel the market going, okay, yes, we finally pulled back, ready, let's do this. But oftentimes this one fails. It fails, it traps high, and basically what it does is it gives sellers a chance, right, to really get short off a level of resistance back down again. So again, I'm looking for, when we have a strong move down, right, we oftentimes see that pullback to the moving average, that kind of first pullback to the moving average, and that's usually a pretty good trade, right? It doesn't really matter what the candle looks like. It's just get to the moving average and sell it, okay? Now, with that, though, head fake, right? So you can see it's been a long, long time since we pulled back to that moving average. Whenever it kind of spends this long and everyone's going, okay, waiting for it, waiting for it, waiting for it, waiting for it. Okay, now it's so late in the day, it's so late in the move. This oftentimes is the okie doke fake out, right, and the move back down again. So the lack of pullbacks is a big clue, right? But it's almost like it's been too long, right? We've gone too far. At this point now, we have to assume we're probably not going to be able to hold below that moving average very much longer, and we'll probably get a relatively decent correction. So that's what I'm expecting tomorrow. At the same time, I have my 1, 2, 3, 4 legs down for that measured move, and I'm also watching this prior month close at 1320.8. Remember, end of the month is right around the corner, which means the prior month levels are definitely going to be on our radar. Had that prior month close at 1320.8 and the prior month low at 1314.5. Both of those are excellent price targets for the sellers in tomorrow's session. So again, lack of pullbacks, right? Lack of pullbacks. Everyone's waiting for that pullback to the moving average, and that tells me we're probably going to trap high on this. So I'm looking for a nice strong move higher. I'd like to see a two-legged pullback up into that battle zone, failure, strength, pull back down. That would be really my ideal scenario for gold traders tomorrow. A nice big deep pullback, two-legged pullback, right up into that battle zone for tomorrow. Honestly though, we might only get what I call the okie doke, right? The okie doke being we're waiting. Now we finally get it, but of course that one fails. I waited all day to sell this, and of course it fails right when I get there. That's the mentality that happens a lot when it goes this long without pulling back to the moving average. So we may only get a little trap high above that 33.4. Moving average comes over. Bears, of course, are in control. The bulls think it's reversing because it's gone too far, right? Don't think like that, okay? I did that all the time when I was a new trader. It's gone too far. It can't keep going lower. Oh, yes, it can. Just you wait. Right? Just you wait. Right when you try to buy, the minute you push the buy button is the minute we're going right back down to that low, and we're going to keep making new lower lows. We don't have the right. We don't have the ability to say when the market's gone too far. That's one of the biggest reasons why I don't use momentum indicators. Momentum indicators, in my opinion, they feed that bad habit of the price has gone too far. The price has never gone too far. Right? We don't have the ability to say that. Okay, this market will keep going lower until it finds enough buyers, right, to support that market, right? The best MACD, stochastics, or any other momentum indicator, you can RSI the hell out of this chart all you want, right? But those momentum indicators are not going to be accurate, right? Accurate at predicting when the bottom happens, right? Bottoms happen when markets balance out. We don't have the information yet. So we know that the bears have control. If we do see a market go higher here, we may see those buyers try to buy, right? Try to run this price higher. Maybe they're successful, probably not. And we'll look for the market to fail, strength, and then pull back down. So that might be the only option we really get tomorrow, right? Get that trap high. That trap leads to a failure leads to strength leads to pull back, right? And then pull back down. I'm going to try tomorrow, though, to leave a runner tomorrow down to that prior month close, because that's going to definitely be a milestone here going into the end of the month. So with that strong move down, if we can get a nice move up, failure, and then back down, try to leave a contract open as a runner, because we may see a nice strong continuation right down to that prior month level here for tomorrow. Now, I've been talking all about these buyers here. How do we turn bullish here tomorrow? Strength first, pull back to the moving average, and strength, right? If we see the market run higher, remember, don't go get too greedy on this, because this could easily fail and go right back down again, right? Strength move up, pull back to the moving average, strength move higher, perfectly fine by me. We'll be a bull at that point, mark up those two highs, down to that low, buying off of that low, and we're good to go, right, for a bull market. If this market does turn bullish tomorrow, look out, right? 1352, that's going to be a big, juicy target for those buyers tomorrow. Doesn't look like that right now, right? But again, keep an eye on that tomorrow, right, for a possible trend reversal. Strength, pullback, strength is what you're looking for when it comes to a trend reversal. How do we go sideways tomorrow? What if we double bottom, right? We talked about this on the E-minis earlier. What if we double bottom on this, right? What if we go sideways? If we see a double bottom on this chart, mark up that high and look to sell up above that high. This also goes for if the market keeps going lower, right? If we keep going lower here tomorrow, right? We keep going lower here tomorrow, keep looking to sell high, right? So if we go lower, that doesn't give you the right to start selling low. If we go lower, keep focused on selling high. Wait for the okie doke, wait for the price to get up above those swings, right, and slam it back down, right, to finish off that move. Okay, so we know we want the price to go up so we can sell it back down, right? If it does hold that pullback, we'll be a bull. Got that plan ready to go as well. Watch for a sideways range. Watch for a double bottom down here. If that's the case, fade off that high. Same plan as the E-minis. And again, if we do keep grinding lower, we know where they're trying to go. They're trying to go on that prior month level, right? Find those swings, trap high, right, and finish off that move from there. So range-bound markets on the crude, on the E-minis, very strong trend here on the gold. Stick to the trend, right? We don't have the right to go saying momentum is dried up yet, right? Follow that direction. Over to the euro. Boy, did we nail that euro in last night's newsletter. I hope you guys made some money shortly after I sent out that newsletter last night on the euro. What a beautiful example of a flag trap high on the euro. If you watched last night's newsletter, you know exactly what I'm talking about. Now, on to tomorrow, though. Euro is bearish and trading at the low of a channel after a strong move lower this afternoon. Anytime I see a strong move in one direction, I know the most reliable selling opportunities will be after a two-legged correction up into resistance levels waiting overhead. If price keeps pushing lower, I'm anticipating a bounce off this measured move target. But if it gets really aggressive going lower, right, the next stop down is that, yep, there she is, that prior month low, right on that 23, right, what is that, 23,235, right, is that prior month low. And then we get the prior week low, and the prior month low is at 22,840. So we get some big juicy targets waiting to the downside here tomorrow if we can get ourselves right into a good position up at resistance. As you can see here, kind of an ugly channel, draw it off the lows, bring it to the high there. That creates your channel, right? That channel, of course, becomes a key level of resistance for us to sell off of tomorrow. At the same time, I get a beautiful naked reversal line. That prior swing can also be used as a level of resistance for selling. I'm drawing my measured move, as you can see, off of that, right, secondary move lower. That will be an objective here in the short term for those sellers. So what if price goes up? What if price goes down? What if price goes sideways? Price goes up to the high of that channel. It'll most likely get above that moving average. We'll look for a failure, strength, pullback, and continue going lower. Failure, strength, pullback down to that measured move. If we can really shoot higher here, a little more obvious, buyers try to come in and buy. Buyers will undoubtedly try to reverse that trend if it's a strong enough move higher. I, of course, will be a bear until proven otherwise, and we'll look to get that move going back down in. Failure, strength, right, pull back, going back down in. What if we go lower? We go lower here, right? Keep going lower. Again, don't sell low, right? Keep focused. Find those swings, incorporate the top of that channel, right? And same plan. The plan doesn't change just because we keep going lower, right? The plan is still the same. We just need to stay patient and wait for that pullback, right? So we can get in at the right spot. And again, much like on gold, we have those really easy to see prior week low, prior month low down there. Those will be some easy targets for a nice runner for tomorrow. You can see here right away, we already have a double bottom here. So watch and see if we go up, down, and then bounce. If we see a major double bottom, then that would mean this becomes a range. And if we see a major double bottom, then I know now I want to sell off those highs, right? Sell off of those highs. That we can get that move back down right into that range. Okay, so we get the up, we get the down, we get the sideways. How do we reverse tomorrow? What do we need? You got it. Strength, moving average, pullback, strength. If we see that strength, pullback, strength, if we see the buyers taking control tomorrow morning, remember, just a strong move up is not enough, right? If a strong move higher was enough, right, then none of these moves above the moving average would be successful, right? So it's not enough for a strong move higher. Strong move higher is one step in the right direction, but now they got to hold that pullback and show me they mean it. If they do, we'll connect those two highs, bring that trend line up, buy off of that low, right? Buy off of that low, jackpot, right? Back up to retest those highs, right? So don't forget, I don't care what direction we trade in, neither should you. Okay, I don't care if it's bullish, bearish, sideways, as long as I know who has control, I'll trade with that direction. If the bears have control, sell at resistance levels. If the bulls have control, buy at support. If it's balanced, like we saw on the E-minis today and crude oil today and probably tomorrow as well, right? Buy low, sell high, avoid the middle, use that pendulum swing, use that momentum. All right, guys, don't forget about our holiday schedule. Again, Friday is a no trade day, right? Markets are closed on Friday. We have an early close tomorrow. Get to it early. There'll be no newsletter tomorrow night, so make sure you guys come back. Well, tomorrow morning, obviously, 8 o'clock Eastern time in my trade room. If not tomorrow morning, come back and see me on Monday evening. Markets are open on Monday, closed on Friday, open on Monday, right? Make sure you check out the free trial on the homepage here at schooloftrade.com. If you want to learn more about everything that is to be a member here at School of Trade, learn our trading strategies, how I use all the indicators, everything's covered in our free trial on the homepage. I'll put all the links in the description of that YouTube video. Our beginner, intermediate, and advanced classes are great for all skill levels of traders. And don't forget, I've got live support. At any time you have any questions, hit me up on live support, and I'll be there to answer all your questions or drop those comments right below the video on YouTube. That'll do it here for me this week. Have a wonderful, wonderful day tomorrow. Hope to see you guys 8 o'clock Eastern time with me. If not, enjoy the holiday weekend. A happy Passover, a very happy Easter. Be safe out there, right? Be nice to each other, right? And be here next time. My name is Joseph. Adios, amigos. Bye-bye for now.